Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, April 15th, 2012. Last week, my comments were more in the bullish camp, which made sense, right? I said we should be looking for a bounce off of the trend line, and we did get that pretty much to the penny. I was saying watch for the low end of the ascending channel to provide support, and there was definitely some buying opportunities there over these 2 days in the market, which would be Wednesday and Thursday. On Friday, we opened up relatively flat, just a slight gap down, and actually trended pretty much lower all day, kind of negating Thursday's action. And that's what my focus is on this week, is the simple fact that in a couple of the major averages, it feels like we're rolling over. So coming into this week, unless we see some serious strength over this 2-day high here, which is about 1388 or so in the S&P, I'm going to be taking my foot off the pedal on longs. Because there is chance here that since we did come down to the ascending trend line in the lower end of the channel and made a relatively weak bounce, we had a 2-day rally which was relatively strong here, but the fact is that Friday's action took out Thursday's action. So I think a little bit of caution is in order. If we take a look at all the other majors, you can see that some of these are actually even more bearish. Like if you look at QQQ, right? Actually going below Thursday's level, seems to be rolling over, seems like it wants to test its 50 MA. The Russell, and I'm just looking at these ETFs here, Russell 2000 also dipping underneath Thursday's action. Really just the SPX is looking the strongest, where it just kind of held up a little bit above Thursday's action. But overall, it does feel like there's chance for rollover. Now, if we do get some strength, what could happen on Monday is we could have maybe a gap up and we hold, and then again your focus has to be on this level here at the 1388, because you've got a clear resistance of 2 days. I put it on the spider so you can see it perfectly on the cash. You've got 2 days here of the exact same highs, so that would obviously be very bullish if the market was able to rally up over that area. Now if we were to, I want everybody to keep in mind what the profile is looking like. This is our market profile on the ES. I talked about this in my blog, and I was saying that look at all the resistance essentially that's above us starting here. So if the market was to move up and over that 1388-ish area, right, I don't foresee that much happening in the coming week, because you have a lot of overhead supply right here. Notice the points of control here from March 29th, April 4th, and April 5th. They're all relatively in the same area, give or take 5 points. That's very, very key. We've seen this before in the markets, and it always causes congestion. Whenever you go there, it's very, very difficult for the market to just break through those levels. So that's something I'm going to be watching basically on the upside. On the downside, we have a decent amount of support here at around 1340. If we were to snap down out of the channel, I would think that that's where the market's going to go relatively quickly. You can see that it ties in with these prior highs here, so I would think that that would be a support level for the market. More than likely, if we do get some weakness on Monday, we will probably come and retest the trend line and get a little bit of support, and then if we are to go down, it'll happen after. That's just neither here nor there. I just don't see it happening all in one day, but it certainly could. I mean, depending on how we open on Monday. Going into next week, as far as specific ideas, I want everybody to keep in mind that the market's going to be focused on bank earnings next week, namely Citigroup and BAC. I'll just throw up a chart here, although these are not stocks that I trade at all, but here's Citigroup also showing the kind of rollover action, and BAC. Citigroup's going to report on Monday morning before the open, so that more or less could set the tone depending on how that comes out for the futures and the pre-markets. So we'll be watching that. As far as some major issues, leading issues, I should say, not major issues, I wanted to point out something that I saw in Apple. Those of you that follow me on Twitter, the stock was really weak on Friday, and I sent out a tweet relatively early in the day saying that I was selling 600 puts on the weeklies, which were expiring that day on Friday, and that worked out really well. If you check my Twitter feed, you'll see that I was selling them for over $1, and then I bought them back in around 2 in the afternoon or something for 25 cents. They ended up going to zero. And the reason I was talking about that specifically of the 600 puts is I was confident that even though Apple was driving down hard on Friday, right, it was right about in here where I was selling the puts, I felt that the trend line would hold. Okay, Apple has since parked itself right on the trend line. So I want everybody to pay attention to this next week. This is important, that if this area is violated, I think Apple could come down to the 50 MA, where it would be obviously a very, very strong buying opportunity. A lot of funds are looking to pick up stocks when they test their 50-period moving average for the first time. Now, if we don't see downside on Apple, I'm going to give you another scenario that I think is going to be interesting, is check out the intraday chart from Friday. I think that there could be a really good day trade happening on Monday if Apple actually strengthens up, because look what's happening here. Friday's action had 1, 2, 3 touches at the exact same area here, just under 611. And any price action above that 611 is going to take Apple where? Into the void right here. I call this the void. This price action really doesn't exist. It's kind of like a window. You can think of it almost like a gap, because the price action just went straight down, like in futures calling that one time framing, right? In market profile, it's like the one time frame, just straight down. So that's essentially what happened to Apple. So obviously this is only going to be in play if Apple is strong and can take back, some of this weakness here over the last 15-minute bar from Friday. But if so, it's something to keep in mind. Keep an eye on this for Monday. If it does get some strength, there could be a pretty strong day trade here, or it could be entering for a swing with a stop underneath Friday's low. That would give you 604 here. That's 611. So you've got 611 rather. So you've got roughly $7 of risk there. And looking at the daily, if you think it's going to retest the highs, obviously there's good risk reward there. Okay, so Apple's at a very, very pivotal area coming into Monday's trade. All right, so that's it for this week. Basically, as much as I was bullish last week, waiting for the move into the trend line, I'm pointing out this week that we have had a relatively weak bounce thus far. We did not make it up to the halfway point here of the move down. We really rejected at prior lows, so that's technically exactly what you expect to happen, that we back off. But now if the market's going to get some strength, this area that I've been mentioning here, 1388 in the S&P cash, is going to be very, very key. We know we have a double top there, and we've got prior lows there. So if the market struggles and is not able to get over that area, I would say 1340 at the least will be our first stop on the downside, and we'll see a little bit of weakness. All right, have a great week next week. Check me on Twitter. The address is right on the beginning and end of this video. As always, on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.